your host, Ken Shreve.
Greetings, everyone, from Los Angeles, California. My name is Ken Shreve. Welcome to another edition of Breakout Investing on TFNN. My pleasure to be with you as usual. The number to use to get through is, as always, 877-927-6648. 877-927-6648. You can listen to Breakout Investing on TFNN every Tuesday and Thursday from 3 to 4 p.m. Eastern. It's also available as a podcast on iTunes if you can't listen to the show live. And don't forget, you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi. That's it, tfnn.mobi in your smartphone browser, and you can get the stream that way as well. I'll be going over some charts on the show today. If you want to look at those charts live right along with me, just go to tfnn.com and tune in to Tiger TV, Channel 1 specifically. And my show is archived on Channel 13 and Tiger TV. All right, let's see what's going on with this market. I hope everyone had a great Christmas, Merry Christmas, happy holidays to everyone out there. It was a nice Christmas in the Shreve household. We are a proud new owner of a hamster. Happy to say that. Cute little guy. Anyway, let's take a look at the market today. Right now we have about a little more than 50 minutes left to go. In Tuesday's session here, the Dow is up 29 points, a little more than 0.2% to 12,323. S&P 500 up percentage-wise about the same amount as the Dow, up a little over 3 points to 1268, and the NASDAQ outperforming. NASDAQ has been kind of a laggard index recently, but the NASDAQ is outperforming today, up almost 14 points, 0.5% to 2632. And let's go ahead and take a look at a chart of the Dow here in Tiger TV. Really, the Dow is one of the strongest, if not the strongest, index out there. The index recently broke out. It has cleared key resistance levels. You can see that. I drew a descending trend line here that I connected the recent highs, and you can see that the Dow has broken out over resistance levels. So that's looking pretty strong here. Move over and take a look at the S&P 500. This index is also looking pretty good. It, too, recently broke out over a descending trend line. It still has some resistance levels to conquer for the S&P 500. It actually broke out over 1267. Earlier today, it hit an intraday high of 1269, so it's trading slightly above a fairly significant resistance level at 1267, and the S&P has another price level to conquer, and let me get that for you. So 1267, it climbed over that level today, and also 1292, which is all the way back here in late October. So S&P 500 acting pretty well. And finally, we'll take a look at a chart of the NASDAQ Composite, which isn't nearly as healthy as the Dow and the S&P 500, but it's come back to life as well. You can see it's still sitting below its 200-day moving average, which is at 2661. It's still sitting below a descending trend line, and for the NASDAQ, 2674 remains a fairly significant resistance level. 2674 is going to be the intraday right here, which was in early December, and then its high before that of 2753. So it looks like the NASDAQ Composite still has quite a bit of overhead supply, potential selling pressure to work through, but the story in the market right now, without a doubt, is the Dow and large cap leadership in the market. Okay, taking a look at volume. Well, when we look at volume that traded in the market last week on Friday, December 23rd, obviously very light. New York Stock Exchange volume on Friday was 475 million shares, and volume today at last check was tracking a little bit even lighter than that. So very light volume day in the market today, and volume on the NASDAQ on Friday was 950 million shares, also well below average. So right now, volume on both exchanges today trading about 5% lower than Friday's anemic levels. Okay, so what's the story in the market right now? Well, clearly we're seeing some window dressing going on as we head into the end of the year. Window dressing is this phenomenon where fund managers sort of dress up their portfolios with some nice big winners in 2011 to make their portfolio look good. Window dressing always strikes me as artificial buying. I mean, you're seeing a lot of big movers today. We'll get into some of those in a moment, but with volume so light in the market, this is really the main thing that I'm focused on right now. It's just very difficult to trust market rallies when they're occurring in anemic volume. And when you look at growth stocks, especially growth stocks in the universe that I target, growth stocks with top fundamentals showing relative price strength, see several names that are very close to swing points, several names that are very close to breaking out. Only a handful have broken out in decent volume, and calling it even decent volume is a bit of a stretch, but plenty of others that are breaking out in light volume. And folks, I just gotta tell you that, and I know Tom on Friday talked about this on his show, but these low volume moves can be very dangerous. The market could keep moving higher from here, and I'm not gonna rule out that possibility. But when I see breakouts, stocks passing swing points in anemic volume, and they continue to hit highs in anemic volume, it makes me very nervous. Certainly, I'm not going to buy these stocks. And of course, it's frustrating when you have names on your watch list and you have identifiable swing points, and you say, okay, the buy rule I'm using is that if the stock crosses this swing point in expanding trade, it's an automatic buy. Well, the problem is a lot of stocks are crossing swing points, and the volume is a big issue. Okay, very, very few stocks are meeting the volume criteria that I use to buy. So I'd much rather just be patient. I know what normally happens when you get markets wedging higher in light volume. Normally it brings sellers into the market. So right now, in terms of my model portfolio, and I haven't mentioned yet that I write Ultimate Growth Stocks over at TFNN. It's a weekly growth stock newsletter, and I have 5 names in there right now that are participating with this market rally. I'd like to own a few more, but the price and volume trends in the market, even though we did see a recent sign of strength, some mild follow through in the major averages, the volume in individual stocks remains anemic. So I'm holding off on being too aggressive with new buys. I really want to see what the market trades like as we head into the new year. So the first few weeks of January, I think we're going to get a pretty good idea of where this market wants to go. I think that there's a good chance that we'll see more volume come into the market. And once we see trading volume start to expand again, it's really going to be about, okay, is new money coming in from the sidelines, or is it going to be more of the same, or are institutional investors still unwinding positions in a lot of former leaders? And we'll have to see. It's hard to say right now. My feeling is that we're going to get one more shakeout in this market before we really start to head higher in earnest, and you really start to see bona fide base breakouts, bona fide moves from emerging leaders that have the potential to lead the market. Low volume breakouts are not the stuff of a new market uptrend. So a lot of it's going to be predicated on fourth quarter earnings season. Companies are closing their books on December 31st, and then our fourth quarter earnings season will really start to pick up towards the end of January. So if the results come in better than expected, expectations aren't very high. We just saw bad results from Oracle not too long ago, some earnings warnings recently from Intel, Texas Instruments. Expectations aren't high, but if the results do come in better than expected, the outlooks look okay, that could be a positive catalyst for the market. But the bottom line right now is, listen, either new money, there's a lot of money on the sidelines, it's either going to come into the market during the first few weeks of January, or it's not. So we'll just have to continue to watch price and volume in the major averages and see how all plays out. In terms of 2012, you're seeing a lot of predictions about what people think, what's in store for the market next year. Overall, I'm optimistic. I look back at 3 pullbacks in the S&P 500 this year. Was 8% back around May, big 21% pullback in August, another quick 10% pullback in November. My take is that a lot of sellers have been shaken out of this market, and when sellers get shaken out of the market, it creates a lot of money that is on the sidelines. And like I said, I believe there is still a lot of money on the sidelines that wants into this market, and once it starts happening, I believe it can snowball. So I'm expecting overall a pretty good year for stocks in 2012. I think we could see a new bull market take shape sometime during the first quarter. I think the month of March has been a hotbed for really powerful follow-through days. Wouldn't be surprised to see one there. So we'll just see what it looks like. But right now, we need more leadership. We need more growth stocks setting up properly. We need these stocks to be breaking out of bases in good volume. Just need to see signs that new money is coming into this market, and I'm not seeing it right now. All right. I don't have a quote on crude oil. Let me see if I can... Let's see if I can find one quickly. Just bear with me here, because I did have some oil names I wanted to talk about today. I think the oil sector is an area of the market that should do well in 2012, and I'm watching a bunch of interesting oil names with top fundamentals. But taking a look at crude oil, let me just get a quote here. Looks like it was up 6th day in a row. Crude for February delivery up $1.66 to 101.34 a barrel. That's on the New York Mercantile Exchange. Looks like the highest settlement since November 16th. So crude oil continues to find a bid. Some interesting names in the oil sector. Let's take a look at Chevron. Big, large cap name in the space. Chevron ticker CVX. All right, take a look at Chevron here. Up 75 cents today to, let's see, 108.25. This is a good example of a stock that is building a good base. It looks poised to break out. Okay, Chevron is near a swing point here. Call it $101 a share. It actually not 101. Let me get a price there on Chevron. Let's see, Chevron 110. 110 is the swing point here. So it's only a couple points below a swing point. Problem with Chevron is that, you're up 5 days in a row, no volume whatsoever, no conviction behind the buying. So Chevron looks interesting. Need to see a big volume surge in the stock, though, to fuel a sustained breakout. Stick with me, folks. We'll be right back. You're listening to Breakout Investing on TFNN.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
In 1929, Joe Kennedy had $4 million. By 1932, he grew it into $180 million. All this during the Great Depression. The good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. How would you like the strategies that Kennedys and others use that are bulletproof against the turmoil of our economy in these fast-changing times? For the last quarter of a century, I've studied and used the secrets used by millionaires and billionaires. These are bulletproof strategies that will astonish you. I'd love to introduce you to these concepts because they will absolutely change your life. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien and host of The Trader's Edge, both seen daily at TFNN.com. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then send me an email at steve@tfnn.com and I'll send you this free report, Pathways to Wealth. That's steve@tfnn.com, giving you Pathways to Wealth.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone. Ken Shreve with you, Breakout Investing on TFNN. Folks, don't forget about a new program inserted into the TFNN lineup every Tuesday and Thursday at 11 a.m. Eastern Time. My former colleague Kate Stalter hosts the Small Cap Roundup on TFNN, so be sure to check that out Tuesdays and Thursdays. Kate Stalter with the Small Cap Roundup, Tuesdays and Thursday, 11 a.m. Eastern on TFNN. Before we went to break, talking about rising oil prices, some energy names looking good in the large cap space. I mentioned Chevron approaching a swing point of $110. Could try to break out here, but this is a very risky chart here. Buyers have clearly started coming into the stock last week, but no juice at all behind this recent move. And as Tom likes to say, see ya, don't want to be ya, right? So Chevron making a low-volume move here. Another liquid large-cap name in the space, oil and gas producer, Occidental Petroleum. Not as healthy as Chevron, but still a stock that has caught a bid in recent days. Shares of Occidental up 0.8% today to 95.41. But when you look down at the volume bars here, just lighter and lighter and lighter volume. So Occidental recently climbed above support, and it has caught a bid, but technically not as healthy as Chevron, but that stock doing well. And there was an IPO that just came out December 14th, 15th, I want to say. It's a company called Laredo Petroleum. Very interesting. Ticker LPI, Laredo Petroleum Holdings. And the chart here, because it doesn't have much of a trading history, looks a little strange. But Laredo having another good day today, up 3.6%, 71 cents to $20.38. And let's see, the IPO date for Laredo was, I said December. Yeah, it was December 15th, and what it did was it priced 17.5 million shares on December 14th at $17 a share. That was at the low end of a expected range of $18 to $20 a share, but this stock has found a bid recently, and what I like about Laredo is that this is an IPO that does have exceptional growth. In its latest quarter, revenues were up 120% year over year to just over $130 million, so you've got triple-digit sales increases in recent quarters at Laredo. And again, it's an exploration and production firm. Fairly liquid. Average daily volumes could be around 400,000 or 500,000 shares. Market cap of $2.6 billion. But they have operations in the Permian and Anadarko basins. So good top line growth at Laredo. This will be an interesting stock in the E&P space to watch going forward. Taking a look at gold. Gold extended its losing streak to 4 sessions, and let's see here. We'll take a look at the GLD. But gold bullion was down for the 4th straight session today. Gold for February delivery fell $10.50 or 0.7% to settle at $1,595.50 an ounce. Right now, the Spider Gold Trust is trading down close to 1% to 154.90, and you can see its 200-day moving average here looks like a resistance level. Gold's technical picture continues to look very weak. In terms of economic data, very quiet this week in terms of economic data and earnings reports for that matter. But earlier today, the Conference Board came out with yet another strong reading on consumer confidence. The Consumer Confidence Index jumped to a reading of 64.5 in December. It's the highest level in 8 months. Well above estimates anywhere from 58 to 60. So strong reading in consumer confidence from the Conference Board earlier today. Coming up this week on Thursday, weekly jobless claims. We've got the Chicago Purchasing Managers Index and also pending home sales. Outside of that, not much. And like I said, really nothing happening this week in terms of earnings. Earlier today, Sears Holdings. This is sort of the sell-off du jour. Sears Holdings did not have good news for investors. It really shouldn't have come as a big surprise. I mean, this is just a perfect example of what institutional selling looks like in a stock. It started back in late October into November. Just institutions dumping this stock in spades. But Sears said on Tuesday it plans to close 100 to 120 Sears and Kmart stores after disappointing holiday sales. So the stock is down $12 now, almost 26% to $33.89. Bad stock. Don't want to touch it here. Stick with me, folks. Thanks for listening. You're listening to Breakout Investing on TFNN. I'll be right back.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks. Give the gift of silver. This holiday season, TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing, allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details.
Did you know that the price of gold is up over 24% this year, while the GDX, the Market Vectors Gold Miners ETF, is actually down 1.4% this year? Not all gold stocks are created equal, and not all gold stocks move with the price of gold. In October, Tom O'Brien recommended a buy of FCX in his gold report, and only 6 trading days later advised his clients to close the position, profiting almost 22% in this one trade. During the same 6 trading days, the price of gold was barely up 5%. Tom O'Brien's weekly newsletter, The Gold Report, gives investors the inside edge they need to profit in this gold market. Each Monday morning, Tom issues a gold market update at around 9:30 a.m., then issues a full report each Tuesday afternoon. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report. To order your gold report with a free 30-day trial subscription, log on to tfnn.com today or call 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin Burnstone Mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone Mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister Mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York Stock Exchanges under the symbol GBG.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. So the question is, right now, is the market sucking a lot of unwitting investors in here, making people feel good? Are we starting to see greed? There's a lot of window dressing going on. On Tiger TV right now, we can take a look at shares of Apple today, up $4.62, a little better than 1%. To 407.95. What you have with Apple, certainly buyers have been coming into the stock. It's up now, looks like 7 straight days of gains for Apple. Every single game has come in anemic volume, very, very light volume. So it's not clear to me that institutions are acquiring this stock. It's also not a breakout for Apple. The stock did move over a descending trend line, which is a breakout, so to speak, but this is a stock that's still working on the right side of a base here. So Apple is going to need to get over the 426, I think it is, the 426 price level, and that's just basically going to be its high that it set, intraday high set on October 17th, right at the top of this descending trend line right here. So Apple is acting better, clearly a beneficiary of window dressing going on here, but really lack of volume behind this move makes it very difficult to trust. So that's really the question right now. What is this market doing? Does it really want to move higher? Well, if it's going to move higher with conviction, we're going to need to see more signs of institutional buying, more signs that new money is coming in from the sidelines, and without it, it's just a very difficult rally to trust. And Apple is not alone. There are other names benefiting from window dressing today. Let's take a look at Intuitive Surgical, ISRG, another name that is performing nicely today. Shares of ISRG are up close to $6 now, 1.3% to $463.60. Intuitive Surgical recently broke out over 449.06. The swing point 449.06 was basically its intraday high set last month in mid-November thereabouts, but it's been hitting new highs in light volume. Just a technical no. Very dangerous buying low volume breakouts. So no one's surprised to see volume light this time of year, but when you're seeing the amount of low volume breakouts, it has to make at least some investors nervous, and it is making me nervous. So I'm going to avoid the common pitfall of getting sucked into a false sense of security. You don't want to buy low volume breakouts. They're very tempting to buy. Not going to do it. Let's go ahead and take a look at Google as well. Another name that continues to trade well, and another name that is benefiting from window dressing in recent days. Google, shares of Google up $8.71, 1.4% to $641.85. Google had a recent breakout over $618, and it continues to look strong. It's showing relative price strength. No juice behind this move either. Let's take a look at shares of Allergen, ticker AGN, on the New York Stock Exchange. Shares of Allergen up 54 cents today, 0.6%, 0.6% to 87.96. Here's a look at a daily chart. You can see a nice consolidation. It's forming the right side of a base here, very close to its recent high. We'll flip over to a weekly chart for Allergan, and what you have here is a bullish base on base pattern. I've talked about base on base patterns before on this show. Basically, you have a base that formed here, sort of a choppy, volatile base, but it broke out, didn't make any headway. Now it's forming the second base here. So you had your first base, your second base, a swing point of 89.25. It's only about a point and a half underneath that. Again, if you see volume come into Allergan, it's probably worth a buy. But problem is you just don't have volume yet. So that's Allergan on the New York Stock Exchange. Stick with me, folks. Coming right back after this break. You're listening to Breakout Investing on TFNN.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before December 31st from your local Barnes & Noble store. And you will be given access to not just one, but two exceptional archived courses. Tiger Scaling, the Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you have until December 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
In 1929, Joe Kennedy had $4 million. By 1932, he grew it into $180 million. All this during the Great Depression. The good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. How would you like the strategies that Kennedy's and others use that are bulletproof against the turmoil of our economy in these fast-changing times? For the last quarter of a century, I've studied and used the secrets used by millionaires and billionaires. These are bulletproof strategies that will astonish you. I'd love to introduce you to these concepts because they will absolutely change your life. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien and host of The Trader's Edge, both seen daily at TFNN.com. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then send me an email at steve@tfnn.com and I'll send you this free report, Pathways to Wealth. That's steve@tfnn.com, giving you Pathways to Wealth. At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted that was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Yes, well, I'm skeptical of this sort of late year move here due to window dressing, seeing a lot of charts, seeing a lot of stocks wedging higher in light volume, and as a result, are really not fitting my buy criteria. I mentioned that I am optimistic about 2012. I think the chances are pretty good for a good year for stocks, but it really is all about this U.S. dollar and euro relationship, and right now we have a strengthening dollar and a weakening euro, and that has kept sellers around in this market. Not lately, as we head into the end of the year in this low volume environment. Buyers are having a pretty easy time of it right now, but this strong dollar, weak euro potentially is going to be an issue for the market in the foreseeable future. Now, I'm talking about maybe the next month or maybe the next couple of months. But let's go ahead and take a look at a chart of the U.S. dollar index here. I think I have it. U.S. dollar. Yeah, this is a chart from Friday's close, but the dollar index today down slightly, down 14 ticks to 79 thereabouts. But you can see the technical health of the U.S. dollar index here. It's still, holding above its 20-day moving average. Its 50-day moving average is all the way down around 78. So again, right now it's at 79.79. So it could still come in lower, but technically still be intact. I talk a lot about the UUP. This is the PowerShares Deutsche Bank U.S. dollar index bullish ETF. This is very similar. Let me just I think this is the UUP. Now, it's basically comprised of a bunch of long U.S. dollar contracts. Very similar chart to the U.S. dollar index. It's been under a little bit of selling pressure over the past 7-8 days thereabouts, but still holding well above its 50-day moving average. Its uptrend is still intact as well. And then when you look at the currency shares Euro Trust, this is still, just not a picture of technical health at all. My take is that Europe is going to continue to get their house in order. There's a lot of pessimism about that. There's a lot of talk that we're going to see, major defaults in that region during the first half of the year, or maybe later in 2012. But still, a lot of anxiety about what's going on in Europe. But my suspicion is that Europe is going to surprise people, and they're going to be able to kind of sort this out. I think it's eventually going to bring buyers back into the euro. It's going to fuel selling in the U.S. dollar, and I think this is going to be overall good news for stocks in 2012. So that's what I'm thinking there. Back to individual stocks here. Let's take a look at EBIX. EBIX is a stock that actually there's some volume in EBIX today. No news, but the software maker is breaking out. It's a good, solid technical breakout. The company provides on-demand software, very hot industry, on-demand software and e-commerce solutions to the insurance industry. So it's a very, niche market, but a market that is driving growth at EBIX. Shares are up 5.5% now to $22.43, and as you can see, a good breakout for EBIX today over 21.89. So good solid technical breakout here in heavy volume. The issue with EBIX is if you switch over to a weekly chart, the weekly doesn't look all that hot. So what you have here is actually a breakout that is from a stock that is still deep inside a much longer base that started earlier this year. So the daily chart for EBIX looks good. The weekly tells me it's a bit flawed technically, but at least the daily chart, you do have a breakout here, and fundamentals are pretty solid at EBIX as well. Company with pretty decent growth prospects, showing good top line growth in recent quarters. So pretty decent company here. Another name in the energy space that looks interesting here is World Fuel Services. Little known name here. Let's take a look at World Fuel Services. They basically provide aviation, marine, and land fuel products, but a good base setting up here. The stock is up 60 cents today, 1.4% to 42.71. Switch over to a weekly chart for World Fuel Services, and you'll see a nice looking chart here. Big long base, pretty clear swing point at 43.59, trading just underneath that swing point. So I like the fact that after the stock hit an intraday high of 43.59 a few weeks back, it has just moved sideways, holding nicely above its 10-week moving average. Can't rule out a breakout here, but again, as is the case with just about every growth stock in this market, low volume gains, passing swing points and light volume does not interest me in the least bit. I'm just not going to be sucked into that trap, because the majority of the time it does not end well. You're either going to have to cut losses short, or a profit's going to turn to a loss pretty quickly. You want to buy when institutions are buying. When they're not buying, you generally just want to stay away. So not seeing meaningful signs of accumulation yet in World Fuel Services, but I do see a technically healthy stock, a stock that has been very stubborn about giving back its gains, and fundamentals are outstanding at this company as well. Valuation pretty cheap for a growth stock at 14 times trailing earnings, but huge top line growth in recent quarters. Company selling a lot of product. Some other names I'm watching here: GNC Holdings. I know this is a recent new issue that I've talked about a lot on the show, but going to continue to talk about growth names that are outperforming and doing well. But I do want to mention one thing about GNC Holdings. First of all, the stock today is up 63%, 2.2% to $29.28. It's a specialty retailer of health and wellness products. You had an initial breakout all the way back over 24.80. That was its intraday high, late August, early September. Broke out over 24.80. If you missed it there, you had another opportunity to buy it at 25.86. Now, what has it done after that breakout? Well, it's performed pretty well. Broke out over 25.86, now trading around 29. You take a look at the weekly chart, and this is a stock, though, that is flat out extended in price. Okay, you want to wait for this thing to base. You want to wait for it to consolidate gains. Don't chase it up here. It is extended in price. You're listening to Breakout Investing on TFNN. We'll be right back.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this traders market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
Give the gift of silver. This holiday season, TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing, allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details.
Hi folks, Steve Rhodes here. Tom O'Brien and I need your help. Together, let's change the cash for gold industry once and for all. Now is the time to unleash the game changer, and that's you folks. We've all seen the power of viral marketing. It's overthrown dictators, and now it's time to rid the thieves in this cash for gold industry. Together, we can change this industry in a heartbeat. You know about our industry-leading payouts, our free tools, our video valuation, and the education that we provide to help folks value their jewelry. Tom and I are experts and the industry's most trusted team. Please join us now by spreading the word to your entire email list. We'll pay you 5% of the total payout, which on average would be $50 per transaction. 100 transactions is $5,000 in your pocket. We'd rather put our marketing dollars in your pocket and more money in your referrals pocket. Go to TigerMetalExchange.com and click on the Become a Partner button to join our team. Let's start a revolution, folks. We can't do it without you. TigerMetalExchange.com, the only click you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also, a regular guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone. A quick check on the markets with a little over 5 minutes left to go in Tuesday's session. Bleeding a little bit into the close here. Not too bad, though. The Dow is now up only 6 points to 12,299. The S&P 500 up a little better than 1 point to 1266. And the NASDAQ still outperforming a little bit, up just over 8 points to 2627. Wrapping up, just talking about a few more movers today, stocks that look interesting. Getting into their fundamental and technical picture a little bit. Here's a look at shares of Alexion Pharmaceuticals, another high-quality growth name, but a stock. Boy, it has made a major price move in recent months, and looks to me like a late-stage base here. To the stock's credit, it is breaking out today. A little bit of volume, considering volume is pretty light in the broad market. Volume coming into Alexion today, about 1.4 million shares had had traded hands up to this point compared to its average daily volume of about 1.1, 1.2. So volume a little bit heavier than normal in Alexion Pharmaceuticals today. Its main drug is Soliris, which is used to treat a rare blood disorder. But, boy, fundamentals are outstanding. This is a high multiple stock, but bright growth prospects for Soliris, and it's got a good pipeline as well. Full-year profit this year expected to be up 46% compared to 2010. Next year, annual earnings expected to rise 32% from 2011. So fast growth at Alexion. And it is breaking out today. So what I wanted to show you about Alexion, though, and why it is a stock that I'm a little cautious on here is, again, this is another example of a late-stage base or a potential late-stage base. In other words, the stock has made just a huge price run. Okay, it's up several hundred%. And the thing about late-stage bases is that they're more prone to fail. Breakouts from late-stage bases, when all things being equal, you always want to catch a stock in the early stages of a price run. Can you make an argument that Alexion could be in the later stages of a price run here? I think so. Looking at its weekly chart, it does look like a late-stage base to me. Now, breakouts from these types of bases can work. Their fundamentals are solid at Alexion. Their growth prospects are bright, like I mentioned. Just a little wary of the stock. Just don't really like, in general, buying breakouts from late-stage bases. A couple of charts here that look a little questionable to me. Former leader Tractor Supply. We're talking about some movers, some stocks with decent technicals. Tractor Supply looks a little bit iffy here. Shares are up 1.5% today to 72.05. This is another example. If you look at a weekly chart of Tractor Supply, major price move, was a big bull market leader. The stock is trading just underneath its 50-day moving average. It's possible this 50-day line could turn into a resistance level for Tosco. Another name that looks very questionable here, Herbalife. We know Herbalife, another big leader. The stock is up 91 cents today, up 1.8% to 52.70, but you can see the stock has really been beaten down badly. It's still underneath its 200-day moving average despite a nice gain for the stock today. And we'll take a look at a weekly chart of Herbalife, and we'll see this is a stock, to me, that looks like it is showing classic topping action. So if you have a profit in Herbalife, if you're sitting on a profit, you've been long for a while, nothing wrong with taking profits here. And frankly, the stock looks like it's putting in a top to me. Coming up next, folks, the Tom O'Brien Show on TFNN from 4 to 6 p.m. Eastern. Be sure to listen in there. And like I mentioned, economic data later this week on Thursday, weekly jobless claims, Chicago PMI. Other than that, pretty quiet week. So have a great day. We'll talk to you on Thursday.
Great Basin Gold is a mining company engaged